Hello, everybody. Welcome to the Crypto Sandwich channel, where we talk about all things crypto, and I'm a ham sandwich. The world is crazy, Bitcoin fundamentals are bullish, and price is not. Geopolitical turmoil continues as there's no signs of the situation in Ukraine de-escalating. US inflation numbers are at a 40-year high. The stock market bounced back a little after 5 weeks of decline, and commodities experienced record-breaking volatility. A free way to support the channel is by liking the video, commenting down below, and subscribing to the channel. Today is Wednesday, March 23rd, 2022. There's a lot to cover, so let's get into some tabs and see what's been going on in this week or so in crypto. First up, in adoption news. HSBC buys virtual real estate in Sandbox Metaverse. HSBC is the first global bank to enter the Sandbox Metaverse, joining a swath of other big brands including Warner Music Group, Gucci, and Adidas. Everybody's getting on board. Bullish. Let's move on. Binance CEO says firm is looking into buying banks and payment processors in Brazil. The company will seek to strengthen its presence in the Latin American country and comply with local regulations, according to CEO Changpeng Zhao. You know how some companies get so big that they buy a stadium and rename it? Well, I could see Binance buying and renaming a whole country. Their growth and expansion game is off the charts. Next up, veteran trader Peter Brandt gives Gen Zers or Zers advice. Contribute monthly savings to Bitcoin and hold. The popular commentator further said to his 626,000 Twitter followers, buy a home, get married, be frugal, contribute monthly savings to Bitcoin and stocks of solid companies, and hold. Keep buying, hope for cheaper prices. Brandt continued by adding that getting a university degree is hugely overrated. He said that people entering a skilled trade would be choosing a very legitimate career path. Bullish Bitcoin endorsement that equates investing in Bitcoin as a rite of passage of adulthood, along with buying a home and getting married. I do. DCA all day. Moving on. Kevin O'Leary shares crypto investing strategy. 20% of his portfolio is now in crypto and blockchain. Mr. Wonderful said, I have millions of dollars. 20% of my portfolio is now in cryptocurrencies and blockchain. In November last year, he said that crypto accounted for only 10% of his portfolio. His investments in cryptocurrency exceeded his gold investments for the first time in October last year. The Shark Tank star emphasized, you have to be diversified. I own 32 different positions. The whole point is you don't know who's going to win. Is Ethereum going to win? Is Solana going to win? Is it Helium or is it Avalanche? I own them all. Sounds like man's playing Pokemon, trying to catch them all. Commenting on the executive order on the regulation of cryptocurrency signed by President Biden, Mr. Wonderful said, it wasn't an all-out ban, so that's good news. O'Leary expressed concerns about the way Biden's directive includes an emphasis on climate risks associated with cryptocurrency. He said he sold his positions in publicly traded Bitcoin mining firms after Biden's executive order. Mr. Wonderful seems to be at the threshold of his own investment allocation advice. Haven't been saying for years, never put more than 5% of your portfolio into one asset, and never put more than 20% of your portfolio into one sector, of which there are 12. Let's see if the expected ballooning value of the crypto industry and assets changes his allocation thesis in the future. Next up, Elon Musk says Tesla and SpaceX see significant inflation pressure, confirms he won't sell crypto. Tesla and SpaceX CEO Elon Musk has revealed that his two companies are seeing significant inflation pressure in raw materials and logistics. He advised people to own physical things when inflation is high, but stressed he will not sell his cryptocurrencies, Bitcoin, Ether, and Dogecoin. He referenced an article published by the Financial Times earlier this month stating that global commodity prices are on track for the biggest weekly rally in more than 50 years, as Europe's natural gas prices have hit a new record. Among those who replied to Musk was the pro-Bitcoin CEO of MicroStrategy, Michael Saylor. He tweeted, USD consumer inflation will continue near all-time highs, and asset inflation will run double at the rate of consumer inflation. Weaker currencies will collapse, and the flight of capital from cash, debt, and value stock to scarce property like Bitcoin will intensify. Elon Musk and Michael Saylor know inflation is not stopping and endorse holding strong assets as they hodl Bitcoin. Bullish. Moving on. More than 80% of the funds locked in decentralized finance are kept on 5 chains, 21 different DeFi protocols. In mid-March, the top 5 blockchains, Ethereum, Terra, Binance Smart Chain, Avalanche, and Solana, command more than 82% of the 198 billion TVL, or total value locked, in DeFi across all blockchains. People are voting with their money, and the results are in. Next up, member of St. Martin's Parliament plans to have his entire salary paid in Bitcoin. Cash. The MP wants St. Martin to become the crypto capital of the Caribbean. While El Salvador is known for its Bitcoin tender law, the Caribbean has become a hotbed for cryptocurrency adoption, and more specifically with Bitcoin Cash. We don't actually get much news about Bitcoin Cash these days. It's had a spotted history, and taking a salary in it is not a gamble I would want to take. But it's adoption nonetheless. Next up, Peter Thiel says his biggest mistake of the decade was getting too late and too little into Bitcoin. Thiel stated, with Bitcoin, I was somehow programmed not to see it as much as I should have. Crazy to think that even one of the founders of PayPal, who presumably has a superior grasp on sound money, investing principles, digital media, and technology, can also overlook for so long the opportunities presented by Bitcoin and the crypto space. I believe it was Max Kaiser who said on this very topic that everybody buys into Bitcoin at the price they deserve. To be honest, when getting into Bitcoin and crypto, I think most of us, myself included, were skeptical if not dismissive of the emerging technology and at a significant financial cost. But either way, this is another example of big money buying into the decentralized narrative. Bullish. Next up, from Prince Philip of Serbia, Bitcoin is freedom. We need to take the money away from the state. The prince stressed, we need to have hard money again. We need to have good quality money that's not subject to inflation. Prince Philip, who worked in finance, said, not crypto, but Bitcoin. It's only about Bitcoin. He continued, Bitcoin is freedom, and this is something I want for everyone. Well, this is refreshing, as you rarely, if ever, hear words from people born into royalty espousing for freedoms and empowerment of individual citizens. I do declare, this bullish Bitcoin adoption is spreading like wildfire across the globe. Moving on. In the endless saga of flip-flopping over adoption, India once again wants to ban crypto. I'm sure they have their reasons, but after all the back and forth on adopting and banning crypto over the years, it's kinda like, who cares at this point? That's just more Satoshis for your broskies. Moving on. Goldman Sachs makes milestone crypto trade with Galaxy Digital. The bank's first over-the-counter crypto transaction could spur other Wall Street heavyweights to follow suit. Goldman Sachs has added to the crypto products it trades, as the bank's expansion is the latest signal of the continued institutional adoption of digital assets. Galaxy Digital Holdings facilitated its first over-the-counter, or OTC, crypto transaction with Goldman in the form of a Bitcoin non-deliverable option, or NDO, the firm announced Monday. The crypto company called it the first OTC crypto transaction by a major U.S. bank. An NDO is an option for which the underlying asset cannot be delivered. Settlement at its maturity is made in cash instead. Although this was not a spot Bitcoin transaction, but a cash-settled one, it's still bullish adoption news from Goldman Sachs. Moving on. Next up, Ron Paul cautions government could still ban Bitcoin. Says he's influenced a whole lot by history. The former congressman has repeatedly warned that the government could crack down on Bitcoin, stating, My concern is that governments over centuries have been notoriously very eager to have control of the money. Believe me, they will not give up control of money. For a little historical context to Dr. Paul's warning, in 1933, Franklin D. Roosevelt was elected President of the United States by promising to end the Great Depression, which had driven the national unemployment rate up to 25% and gutted the economy. FDR quickly realized, however, that he could not print enough money to pay for his spending program even by increasing taxes. The Federal Reserve Act of 1914 stipulated that all Federal Reserve notes, paper money, had to be backed by 40% gold owned by the federal government. In other words, for every dollar printed, the government needed 40 cents of gold in the bank. One of FDR's first acts as president was to declare gold ownership, both in coins and in bars, illegal for all Americans and punishable by up to 10 years in prison. Anyone caught with gold would also have to pay a fine of twice the amount of gold that was not turned over to the Federal Reserve in exchange for paper money. The prohibition against owning gold was not uplifted until 1974 in the United States. This reminds me of the Nate Rothschild's quote that goes, "I care not what puppet is placed upon the throne of England to rule the empire on which the sun never sets. The man who controls Britain's money supply controls the British Empire, and I control the British money supply." This is all just another glowing endorsement for decentralized finance and personal control of one's wealth. Freedom is just another word for nothing left to lose. Next up, the European Parliament votes against proof of work ban. As Bitcoin and other digital assets have grown over the past year, regulators and government bodies worldwide have placed intense scrutiny on proof of work mining. A ban on proof of work would have devastating consequences for the industry. Today's vote ensures that proof of work based mining can continue in Europe, at least for the time being. While most newer cryptocurrencies use proof of stake consensus mechanisms, the biggest crypto asset, Bitcoin, uses proof of work, and Ethereum will soon shift from proof of work to proof of stake. This is bullish news. Moving on. Next up, Bitcoin ATMs illegal in the United Kingdom. This is not so bullish news. Moving on. The United States Security and Exchange Commission, or SEC, has disapproved spot Bitcoin exchange traded fund applications from the New York Digital Investment Group and fund manager, Global X, after deferring on a decision several times in the last year. But they sure have no problem letting a paper ETF run wild though. Moving on. The Impervious browser, a company that works over the Lightning Network, released a bundle of APIs which created a programmatic layer for Bitcoin. On that third layer, the Impervious browser lives. The company described what can be expected from it. The Impervious browser, your portal to the P2P internet, Zoom without Zoom, Google Docs without Google, Medium without Medium, WhatsApp without WhatsApp, payments without banks, identity without the state, all without centralized intermediaries. Another way of looking at what the company is doing, according to Jimmy Song, they will essentially make every Lightning node a server as well as a client. He then adds, "The dream of a decentralized internet seems to be building before our very eyes. However, let's take a step back. What's this Bitcoin Layer 3 all about? At Layer 1, there exists the Bitcoin network, money, deep storage, global root trust. At Layer 2, there exists the Lightning Network, cash, fluid payments, peer-to-peer trust. At Layer 3, there exists the Impervious Network, applications, streaming micropayments, and node federation." Chase Perkins, Impervious founder and CEO, explains, "A Layer 3 network that can be used to set up decentralized, virtual, private networks, VPNs, messaging platforms, or even streaming videos or DJs or podcasts. I can be in China or I can be in Iran, and this allows us to speak freely without censorship." This is next level bullish. Moving on. 10 million Ether now locked on ETH 2.0 staking contract. This essentially means that investors are collectively betting over $25 billion that Ethereum's move to proof of stake will be a success. Bullish. Moving on. LimeWire partners with Algorand to power its NFT marketplace. The energy-efficient blockchain Algorand will support LimeWire's upcoming marketplace. Algorand was chosen because it relies on staking, making it an energy-efficient and carbon-negative blockchain. Whoa, blast from the pirate past. This may be a fitting rebrand, as the crypto space has the same uncharted feeling as the early 2000s internet days. Back then it was the wild, wild west of media and communication, where crypto currently is the wild, wild west of finance. Next up, report by research firm Privacy HQ. 50% of NFT holders have lost access to their NFTs. Security concerns, however, didn't seem to slow the growth of the booming industry, which reached $17.7 billion in sales last year. This statistic is nuts and shows not everybody has what it takes to bear responsibility for their personal finances and private keys. Moving on. Hey everyone, hope you're enjoying the content so far. I'd like to take a quick minute to share a couple ways you can help the channel by using the affiliate links for some products that I use and recommend. First up is Ledger, popular for their Nano line of hardware wallets. Hardware wallets are a necessity for crypto protection. If you do not control your private keys, you do not own your crypto assets. Next up is Trezor, popular for their Trezor 1 and Model T hardware wallets. Manage your entire digital identity, coins, keys, or passwords, all on one device, owned and controlled by you. If you're in the market for a hardware wallet, please consider using an affiliate link on screen or down in the video description below. Remember, not your keys, not your coins. Thanks for supporting the channel. Let's get back to it. Taking a look at Coin360, pretty much the entire market is slightly down in red with single-digit losses. There hasn't been much volatility or price action lately. The Fear and Greed Index is up 7 points to 31, sitting in the fear zone, slightly up from extreme fear. I'm still taking note of the divergence between this indicator compared to the price action, and still on the lookout for any shenanigans. Let's dive into some charts and take a closer look at some price action. Let's take a look at the Bitcoin dominance chart. Not much been going on volatility and price-wise in the crypto industry since we last spoke. Bitcoin dominance fell from the 44% mark down 2% to where it currently sits at 42.85%, making a lower high and finding support at the top of the descending triangle as discussed in the last episode. Check out the previous few episodes for speculation on whether Bitcoin dominance will test support before trying for the 52% mark, or if it will drop back down and consolidate within the descending triangle. Now looking at the Bitcoin price chart. As you can see, we are exactly where we were, and here we still are at just over 42K, waiting for Bitcoin to break the $46,000 mark before retesting the 52K resistance. That would then signal maybe the bulls still have a fighting chance in this cycle, assuming Bitcoin still follows cycles. But until directionality emerges, we remain range-bound in this ascending triangle formation, generally, which has a bullish outcome. And now, for everyone's favorite shift coin, let's take a look at the gold chart.
I love gold!
You sure do, Peter. Since the last Crypto Sandwich episode, gold has halted its bullish run, rejecting at the $2,070 recent retest of the all-time high, and dropped down 8.5% before rising a little bit to where it sits now at $1,921.50, finding support off of both the top of the symmetrical triangle and the 650-day trading range, exactly as speculated in our previous episode. If the price of gold drops further from here, I could see an area of support around the $1,870 region. And unless the price breaks and holds above $1,970, I wouldn't get too excited. And just before we wrap up, I'd like to share the following bit of wisdom with you if you're trading or investing. Don't try to predict the market, react to it. And just like the markets, life can bring you ups and downs. You gotta have a plan for both outcomes and be ready to react when the moves happen, or you might end up getting sideswiped, deer-struck, or bankrupt. That's it for this episode of Crypto Sandwich. Thanks for watching or listening. Let me know in the comments below if you'd like to see me cover something I didn't. And don't forget to like and subscribe, as it's a free way to help the channel. Until next time, I hope you have a great time. Keep your head up and keep your bread up. Disclaimer. The Crypto Sandwich channel is for entertainment and information purposes only. Nothing on this channel is financial advice, nor is it meant to be a recommendation to buy or sell any financial instrument. I'm not a financial advisor. I'm a sandwich. If you take financial advice from a ham sandwich, you're out of your bread box. Always do your own research.